Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. And this is a show where we take you through all the stocks that are buzzing away on trade, either on the back of technicals or on the back of research. But for now, let's take a look at where the markets are at. Vinny, bit of a profit taking coming in the markets after hitting that life high on Nifty, but the only a pack which is doing really good, the only pocket that is doing very well is Nifty Bank.
Absolutely.
That's where the action is.
Today is, while Nifty, mid cap, small cap, all of that is not holding on to any gains. Look at the Nifty Bank. No stopping that in terms of a momentum today, up 1.4% in trade. All the private banks, ICICI Bank, HDFC Bank, Axis Bank, IndusInd Bank, they are the top gainers today in the Nifty 50, and that's where the trend has come from, that private banks today are managing to hold on to good gains. PSU banks a bit subdued, but still managing to hold on to better gains than what the Nifty is holding on to, or the mid and small cap, because the broader markets also are seeing a bit of a pressure, and like Ankita was saying, a bit of profit taking is what one could say. Let's not forget that run up has already come in, right? We saw the markets running up, new highs were coming in there, even yesterday was record high level. So yes, post that, we're seeing a bit of a subduedness today, at least in trade, and that's how the market setup is looking like. Nifty Realty is among the top sectoral losers. Energy as well as infrastructure is among the top losers that are coming in today. But yes, that is what we're watching out for today. Nifty off the day's highest point, but not back in the green yet, Ankita.
Absolutely, Vinny. So that's where the market is perched at. But let's begin the countdown of all the stocks that are in focus today. And for that, we're joined by Nagaraj Shetti, Technical and Derivative Research Analyst from HDFC Securities. And from the research side, we are joined by Jinay. Hi, both of you. Welcome to Market Fatafat. So let's get started with all the stocks that are in focus. First up is Gland Pharma. In fact, this share fell nearly 3.7% in the early trading session as Shanghai-based Fosun Pharma is likely to offload a 6.2% stake in the company via a big block deal. Now, the deal size is estimated to be approximately 1,815 crore rupees and is reportedly being carried out at a 4.9% discount to Tuesday's closing price, which was 1,839 rupees. UBS is managing the deal, and this block deal represents the second instance where the promoter is reducing the stake in the company. And remember, following a successful initial public offering in November 2020 that raised 6,479 crore rupees, including an offer for sale of 5,000 crore rupees by the company's promoter. So this is the second time that they are offloading the stake, and on the back of that, Gland Pharma is trading with cuts of 1.5% right now.
Okay, that's Gland Pharma, but let's move on to the first stock that we should talk on technicals. And Nagaraj, good afternoon. You've picked out Chambal Fertilizers for us. All these fertilizer names are surely seeming like a bit of a nice up move that we've started seeing in the last few trading sessions. What are the charts indicating for Chambal Fertilizers? What is it that one should keep as a target here?
Hi, good afternoon, Vinny. Fertilizer stock has been in a limelight for the last couple of weeks, and this stock too has risen significantly from the lower levels. Though it has placed at the higher levels, still there is no indication of any significant reversal pattern building up at the higher levels. Technically, that means more upside is likely to come. From 472, I'm expecting more upside from here, and the next overhead resistance to be watched for this stock could be around the 520, 525 levels in the next 1 month.
Okay, let's move on to the next stock that we should highlight today. Is obviously a lot of bulk deals that we've seen happening. But before we come back to the bulk deals, we have Park Hotels that's in focus. Why is Park Hotels in focus? Now, they've actually signed one hotel under the Park brand, and this is in Nainital. So they're surely expanding their exposure there, and because of this opening of the new hotel, we're seeing Park Hotel surely is being chopped up in trade. Let's not forget, overall the travel tourism is picking up and more on that front, and that is why today Park Hotels managing to hold on to 6% gain, almost near the day's highest point, after they have signed in one more hotel at one hotel under the Park brand in Nainital.
Alright, moving on. Jinay, you've picked out Apollo Hospitals for us. Tell us, we did see a brokerage note that came out today on Apollo Hospitals. Tell us, what is the brokerage note saying?
Well, so UBS have maintained their buying rating and hiked the target price to rupees 7,500 versus the previous target price of rupees 7,300. Now, they believe that Apollo Hospital is a candidate for re-rating. They are expecting a 16% CAGR growth for the hospitals over a period of fiscal 24 to fiscal 28, owing to more beds, higher average revenue per occupied bed, which is ARPOB, and higher occupancy. They also say that the implied valuations of the hospital segment is at 19 times of FY 2026 EV is to EBITDA versus the peers which over the past 6 months have re-rated from around 20 times to 26 times EV EBITDA multiples. Now they believe that continued reduction in discounts by Apollo 24/7 is something which will help the company to keep their losses lower, and UBS thinks that markets will appreciate this move going ahead, and they believe that this decent growth visibility makes Apollo a stronger candidate for re-rating.
Surely keeping an eye out on Apollo Hospitals. Let's move on then and talk about IDFC First Bank. And Nagaraj, while obviously YTD, when you look at it, there was a bit of a subduedness. But in the last 1 month, seems like the stock is picking up pace. Is there any indication of that on the charts and technicals? What is the view there?
Yes, IDFC Bank, if you look at the historical charts over the last 1 year, this stock has been gradually underperforming. We may observe the lower tops and bottoms on the chart is indicating the subdued movement for this stock. Recently, after moving into a range-bound action in the previous 1 month, it has moved up. Technically, it has broken above the descending trend line around the 80-81 levels. The overall chart pattern is looking positive. Volume has expanded during upside breakout in the stock price is indicating more upside is likely to come. I think this stock has made an important bottom around the 70-72 level, which is the low of during post-election results. And I'm expecting the next overhead resistance would be around 92 to 93 levels, which the stock is going to be achieved in the next few weeks.
Right. Moving on to the other counter that is in focus today, and that's Craftsman Automation. Now, this stock is in focus today on the back of the fact that the company has launched a qualified institutional placement or a QIP of rupees 1,200 crore rupees with an indicated price set at 4,400 rupees per share, offering a 7.7% discount to the current market price. And on the back of this QIP, the stock is buzzing away in trading with gains of 4% right now. And while kickstarting the first edition of the Leadership Dialogues, RBI Governor Shaktikanta Das joined us on our 15th anniversary celebrations, expressing optimism over India's first quarter GDP projection of 7.3%. Among the other things, he emphasized on the resurgence of rural demand. Specifically addressing the fintech space, Governor Das also expressed optimism over the sector while abiding by the said regulations. Let's hear out excerpts from the chat we had with him last evening.
Parameters and indicators of our economic, of our Indian economy and our financial sector, they at the moment look very stable. I think SEBI is fully seized of what's happening in the markets, and we have our regular interactions with the SEBI. We are watching all these segments of even the real estate sector, including housing. We are monitoring it. The numbers at times may look very high because, you see, HDFC merger took place last year. So that was not a part of the banking sector assets. That was a part of the NBFC. It was a housing finance institution. The HDFC was a housing finance institution, so that got merged with the HDFC Bank. So therefore, because of the impact of the merger, the growth in the, the real estate sector or housing sector may look high. But if you net it out, net of the impact of HDFC merger, the growth is within, nothing to worry about. But we are monitoring it nonetheless. And a major difference between what is happening in the, now in the real estate or the housing sector in particular, and the position which prevailed, let us say, more than about 10 years ago, is that now you have a RERA. Yes. So the RERA is now regulating particularly the housing sector. So the kind of asset bubble which we saw earlier in the housing sector, the paradigm has changed. And from Reserve Bank, we are monitoring it very, very closely, very, very intensively. And at the moment, it is all right. If at some point of time, some action becomes necessary, not just in the real estate sector, but any other sector, the Reserve Bank will definitely act proactively.
Okay, let's also get you some details that we have, and now sources are telling ET now that MEITY has met firms to review the concerns on a draft digital competition, the competition law. 9 industry association company executives will be meeting there. What more is going to be happening there? Sumita is joining in with us with all those details. Sumita.
Yes, in fact, we're learning from our sources that a meeting happened yesterday with the Secretary of IT and Electronics, Mr. S. Krishnan, and he met with several industry stakeholders as far as the proposed legislation on digital competition law is concerned, all of whom shared their concerns and shared their views on this proposed regulation. In fact, overall, the industry has largely been divided, with big techs speaking against the legislation, stating that this will curb innovation and investment, and startups, on the other hand, hailing this as something that will bring in transparency, that will bring in fair competition as well. In fact, we're learning that several industry bodies as well attended this meeting, including CCI, MCA, ADIFT, and PACC, AOI, all of whom attended that meeting. In fact, 2 more consultations are likely to happen before a final decision on this is really taken. But let's go through what these 2 groupings had to say. So IAMI, for instance, said that this proposed regulation would stifle innovation in the sector, stifle investment in the sector. Also, it stated that the dual whammy of legislation, basically, because there is a Competition Act that exists as well, will stifle, like I said, innovation and investment in the sector. It also stated that there is no regulation needed, especially because the Competition Act is already there, and IT laws which can be amended to bring in the necessary changes. But on the other hand, ADIF, which is the Alliance of Digital India Foundation, also representing the interests of several startups, it hailed this legislation, that it will ensure fair competition and will rein in big tech and will strike a fine balance between innovation and fair competition. So the Digital Competition Act, the draft of which was introduced this year, it is, according to what industry sources tell us, it is modeled around a European Union's Digital Market Act 2022. It bats for putting in obligation on digital companies, more so on big tech companies, on large digital organizations, to make them accountable, and bats for predictive regulation. So that's as far as the proposed legislation on digital competition is concerned.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you some more stocks.
Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with the stocks that have been buzzing in trade today, and talking about Tata Motors. That is in focus. Couple of news flows here. One, Tata Motors announced that it will be increasing the price of its commercial vehicles effective from the 1st of July 2024, and this is going to be up to a 2% price hike that we could expect, mainly to offset the impact of the rising commodity prices. Other than that, we also had some commentary that came in from JLR, where they're saying that the FY25 outlook, anticipating strong growth going forward in terms of financial performance and continued progress. Other than that, what they are also highlighting is that they expect FY24 revenue around $30 billion, EBIT margin at around more than or equal to 8.5%, and investment of $3.5 billion, free cash flow expected at around $1.8 billion. That's the word that came in from JLR. And other than that, the long-term vision is to achieve the revenue of $38 billion with an EBIT margin of 15% for the company, and a free cash flow of $3 billion and a strong balance sheet. So yes, all these commentaries as well as the news flow in terms of price increase is keeping the stock in focus. As of now, down 0.5% in trade.
Right, that is Tata Motors. But Nagaraj, coming to you, you've picked out a banking name for us. City Union Bank is what you've picked out for us. Tell us, what are you seeing on the charts? Nifty Bank is totally hitting it out of the park today, but what's penciled in for this one?
Yeah, last couple of sessions, banking sector has started to outperform along with the smaller banks, as well as some mid sector banking stocks are starting to move on. City Union Bank is the one after a sharp recovery in the early part of June. It has gradually moved up recently, and currently the upside momentum has taken place. Currently showing some consolidation at the higher levels. I'm expecting the resistance of around 161 is going to be overtaken on the upper side. Overall chart pattern is looking positive. Even RSI, 14 period RSI on the daily, weekly are showing positive indication. I'm expecting a decisive upside breakout in this stock around 160 levels. Once it breaks above 160, then it could move towards 175, which is the next set of resistance in the near term.
All right, moving on. Varun Beverages is another stock that is in focus today, and it is coming on the back of the fact that CLSA has come out with a note on Varun Beverages, and it is maintaining a buy, and they've hiked the target price to 1,977 rupees from 1,774 rupees earlier on. Now, they feel that the improved affordability compared to tea, coffee, and fruit juices is a positive for Varun Beverages. Also, the deeper distribution with affordable price points for new products is likely, and acquisition keeps the growth engine, humming. And the top pick, this is the top pick in the consumer staples for CLSA, and therefore they're maintaining a buy, and they've hiked the target price also. But currently, we did see a spike coming in the morning, but since then the stock has actually cooled off. Profit taking coming in there is currently trading with the cuts of 0.5%.
Keeping an eye out on Varun Beverages. Let's move on to the next stock that we're talking about, data patterns. And Nagaraj, what is the view that you have on data patterns? Last 6 months, surely we had seen a recent uptake of around 50% for the stock, but in the last few days, seems like a bit of a subduedness again is creeping in for the stock. So what's the word on this one?
Yeah, this defense stock was in a limelight a few months back, and recently it has shifted into a downward correction. I think the recent swing low of around 2425 levels seems to have made an important bottom reversal for the stock. Since then, the stock has been a gradual uptrend. Currently showing consolidation around the resistance of around 3100 levels, 3150 levels. I think this is going to be a opportunity to add at the lower levels. I'm expecting eventually this hurdle is going to be taken on the upper side, and the next resistance to be watched after this upside breakout will be around 3450, 3475.
All right, Jinay, you've picked out Netweb Technologies for us. This one is trading with gains of over 3% right now. Tell us, what is the news that's powering the stock?
Well, so Netweb unveils a new AMD-based made-in-India servers for data centers AI systems. Now, on this, management says that this new offering aligns with Government of India's mission of Make in India initiative to accelerate innovation and also builds best-in-class manufacturing capabilities designed and built in India. Now, this will further allow the company to build up systems of variety of use cases ranging right from data centers computing requirements, high performance computing, AI systems such as Power Workstation AI to cloud solutions with machine learning operations to variety of storage solutions as well. Now, on this, Mr. Sanjay Lodha, who is the CEO of Netweb Technology, commented that this range of servers will represent their commitment towards the Make in India mission and also highlights the capabilities of this data center servers to produce world-class technology.
Okay, surely keeping an eye out on that. That is Netweb for you all. But let's move on, talk about IFL Labs then. And Nagaraj, what's the word on IFL Labs? What is the target that you're keeping an eye out on here?
Chartically, IFL Lab is looking weak. We have seen formation of important top reversal in the stock around 1350 levels. There was a distribution kind of a pattern during April and May months around 1350, 1360 levels, and eventually the stock has broken down from the higher levels and currently placed at the edge of moving below the 200-day EMA around 1130, 1135 levels, and I'm expecting this support is going to be taken out on the lower side, downside breakout. And the next lower supports will be watched after the downside breakout of 1130, 1125 levels, so could be around 1050, 1060, which could be achieved the lower end in the next 1 month.
All right, moving on to the other counter that is making news today is a Sona BLW. In fact, this share was up almost 4% and it hit an intraday high today. It has cooled off from those highs, of course, and now is trading with the gains of over 0.5%. But the jump in the stock price came after Sona BLW announced that it has secured certification for its traction motor for electric three-wheeler under production-linked incentive or PLI scheme. Now, in an exchange filing, Sona BLW said that they hereby wish to inform that the company has received certification for another product, that is traction motor for electric three-wheeler under the PLI scheme for automobile and auto component industry in India from the Ministry of Heavy Industries, for availing the benefits and incentives that come under the PLI scheme. And on the back of this coming in, Sona was trading with gains of 4%, has cooled off and is now trading with gains of 0.6%.
Surely keeping an eye out on that. But let's move on, talk about Industar's Vodafone Idea, what's happening on that front. Now, actually in Industar, Vodafone PLC has sold some of its stake. Now, previously they'd spoken about selling 9.9% stake, but this morning we got to know they were looking to sell 18% stake, and that block deal has happened. Let's pull up Industars as well. That's the one we should be focusing on, because the stake sale happened in Industars, where Vodafone PLC sold their 18% stake, is what we're understanding from sources. This is via a block deal, and Vodafone PLC at present, before the stake sale, held around 21.05% stake in the company. The price range for this sale of Industars, I would request my producer to please fire Industars as a stock. Industars is what we're talking about. So yes, on the back of that, Industars is also going to be in focus, as well as Vodafone Idea, keeping an eye out on both of that. Industars clearly is under pressure. Vodafone Idea chopped up in trade because its parent company, Vodafone PLC, has raised some money by selling stake in Industars.
Alright, that's news coming in on Vodafone Idea and Indus Towers. But moving on, Jinay, IIFL Finance is what you picked out for us. A brokerage note is backing the stock. Tell us, what is the brokerage note saying?
Well, so Motilal Oswal has come up with a buying rating, and they've hiked the target price to rupees 570 per share. Now, what they believe that the OPEX grew around 25% Y-on-Y basis to rupees 770 crores. With a cost income ratio of about 49%. Now, management expects this cost ratio to remain at elevated levels until the gold loan business resumes their operations and stabilize. Now, Motilal Oswal expects the OPEX to average AUM ratio to be around at 4% in FY 2025 and 4.1% in FY 26. Now, they are also expecting the credit cost to increase in around 2.2% in FY 2025 and then gradually decline to 1.9% in fiscal 2026. Now, they are estimating the ROA to decline about 3% and ROA to decline about 15% in FY 2025. Now, further, they are estimating that the gold loan ban will be revoked by September of 2024, and that will and that's how IFL will regain the momentum in the gold loan business by second half of FY 2025.
Okay, surely keeping an eye out on that. But with that, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.